Hi everyone, Megan Marsh here with Lake Erie Mortgage in Erie, Pennsylvania, and today I wanted to go over a topic that is one of my favorites. And the topic is don't just shop for an interest rate. And as a loan officer, we get calls all the time and people will say, I'm calling to get what your interest rate is. And I'm just letting people know that's the wrong way to look for your mortgage. You don't want to call around to 4 or 5 places to find out what the rate is. And I'm going to show you why and give you an example. So up here we have, I'm just going to do it for a $175,000 house. And for easy comparison purposes, we're going to say you have 10% to put down. So what I'm going to do is walk you through the different loans, showing you how the rate does not mean the lowest payment or the best program for you. So the first thing I'm going to show you is the most typical type of loan, which is right here, okay? And this type of loan is one loan, 10% down with mortgage insurance. Let's say your credit score is a 740. Interest rate is 3.625, so really good rate because you've got a good score. Your payment will be $718. Your monthly mortgage insurance is $57 for a total of $775. Okay, now let's compare it. If you look over here, there's a different program called an 80-10-10. So you split the loan up because what it does is it eliminates that mortgage insurance. So if you look, the rate's higher, 3.75. with a second mortgage, a home equity line at 4.75. So both rates are higher, but let's look at the payment. $648 and $69, $717. You're saving almost $50 a month. It's a lot of money over the life of the loan. Then let's look next to the first example. What if you have your score is in a 740? Let's say you have a score in the high 600s, a 675. What most people don't realize is conventional loans especially are tiered. Your rate is based on your score and so is your mortgage insurance. So let's look at where your rate goes up to. It goes up to a 4.125. So all of a sudden, and your mortgage insurance almost doubles. So your payment now goes up close to $100, about $75 if your score is a little bit lower. So unless the person you're calling knows your score, you know everything about you, they might quote you a rate that's not even something you're going to be able to get. Now let's take, somebody with a strong score, they can do an 80-10-10, a single loan. Let's look at what's called an LPMI. An LPMI is a lender-paid mortgage insurance. So what they do is they bump the rate up and eliminate the mortgage insurance, so there's zero there. So now your payment of $775 goes down to $740. This is a great loan, especially if you're going to be in the house for 5 to 10 years, which is when the mortgage insurance will fall off, is after that time period. Here's another option. Another option is what's called a single premium. This is one of my absolute favorites. The single premium gives you the same interest rate as the regular loan, but there's no mortgage insurance, and the reason is you pay a one-time premium. Some banks let you do it at closing, some let you finance it into the loan. Lastly, I want to go over, if you are calling me and saying, what's your interest rate today? Well, my lowest rate is my FHA loan. These are all conventional loans. FHA has a 3.5, sometimes 3.375 interest rate. Let's look at the payment though. If you're this person right here, and I did it with 10% down with both options, the payment's $818 because that mortgage insurance is so much higher. So what does it matter that the rate is lower if the mortgage insurance is higher? Same thing with USDA. That's another loan that's out there. Most people use it when they're putting 0 down, but I've had people compare it with 10% down because look, once again, $718, $65, $783 is the payment. So maybe for this borrower with a $675, a USDA loan is better if the house is eligible. So I guess the lesson to be learned here is I don't recommend calling and rate shopping. You more want to talk to somebody who has all of those programs. That can be hard because you can call lots of different banks, or what you can do is you can call a broker like us because we have every single product that's listed on this board, and you will be guaranteed to be able to look at the loan that fits best for you and figure out what has the lowest payment and has you paying the least amount over a 10-year period of time or a 30-year period of time. So thank you for listening. Have a great day. And if you have any questions, you can email me at Megan, MEGAN, at LakeErieMortgage.com. Thank you.